Hey, this is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on the new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, hey, you talking to the Prophet? Hey, hey. We talking condos and nice clothes and driving Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them house roads, but had to stay low. Now there's solutions to hard bills we couldn't pay for. I talked to Prophet to get some profit, we couldn't change the top. If it's a stock and I need a cop it, I wait for him to drop it. Ain't no option, let's get it poppin'. We chillin' in the trap. I need some crypto, put it in my pocket by any means I rock. This is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain, we here to fix that. You want the news on them new stocks, this where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, hey, you talking to the Prophet? Hey, hey, you talking to the Prophet?
It's all fake news. It's phony stuff. It didn't happen.
Whoa. Let's see. So many buttons. Okay. Let's go to this one. Who do we got? Let's start over on the YouTube side. Scott Hill, what up? And so here's what we'll do. If you have some message you want to send to the universe, if you're on the YouTube and you put your kind of good morning message in there. So here's what you do. If you have good morning, and then some message, I'll put it on screen and you can say good morning. So that's technically a good morning. That's a good morning. What up is close to a good morning. Lori, El Paul, Jerry in the house. Timothy, darting uphill. What's up? Let's see. Let's not miss anyone. Ryan, Belinda, Biotech Breakout. Sylvia. Let's see, just got an email. Nexo trading. Yeah, Nexo, the token's getting a little bit more adoption. That's pretty cool. Mark, what's going on? Brady in the house. This is not Wolfpack. It's Nerdpack. Nerdpack. Let's see. Jarrett, what up? Let's see. Yep, we're going to talk biases today. Let me go over and see who, Brendan, good to see you. Let's see. All right, there's at least 17 people here. We should get at least 17 likes. I don't want any of your money units. I'm going to get those trading anyway. Maybe not yours. Antonio, Biotech Breakout, Bold Mold, Mega Pack, Belinda. All right, cool. Let's see. Wolfpack Ryan, 420. And I think we pretty much got it covered. Okay, I get that a lot. I mean, I wasn't saying I get that a lot. I was saying I get that a lot too. All right. We're going to look at, obviously, our cognitive bias again. I think we're starting on outcome bias. That's what we'll be doing in a minute. But before we get to that, we're going to look at some prices, some interesting happenings. For those of you that got into SDAO, Singularity Net, the DAO token, that thing is on fire. It's at, well, we'll get to it. It's at a good price if you bought it. Let's just say that. Singularity, bro. All right. So after these non-commercial breaks, we will be right back. And we'll just get this all started. Now, let's see if I can cue this thing up, and off we go.
LeBron James, LeBron James, LeBron James, LeBron James.
Oh, it gets me every time. That kid is the greatest. Okay, we're going to talk outcome bias. We may even look at some of the other ones. We may look at overconfidence by effect, risk compensation, the halo effect. We'll see. We'll see how far we get. But first, we are going to talk price a little bit. So let's look at that. Let's see what's going on. Let me readjust this so your eardrums don't blow out. Okay. Michael Murphy, good to see you. Barno, good to see you. Adam, what up? Okay. All right. What's going on price-wise? The Bitcoin, 34.5. So it's pretty good. It's kind of starting to grind its way slowly higher. You should be a net put seller. Just keep selling underneath. Sell at a price that you're willing to own it. Let's see. Ethereum 2342 grinding its way up. It's had a nice little week, up 10%. Cardano 142 up 9% Also cool. Polkadot up 7.5% on the day, 9 on the week. So even though the recoveries don't happen completely in tandem, they're very similar. Look at Ethereum is up 11, Cardano 9%, DOT 10%. Protocols, right? Protocols. Matic, buck 14's up 1%, 3 on the week. Theta, kind of grinding slowly up. Cosmos had a big week. It's kind of fallen off a little bit, giving some of it back. I don't know what to think of Cosmos. Thorchain, Rune runs on Cosmos. That's cool. Cosmos has some things they're doing. I don't know, man. Maybe their outreach isn't there. I'm not sure what they're doing wrong. I just feel like they're not, but they're definitely unloved compared to the other assets. Everything else is up 1,000%. They're up 300%. So if you were going to get into Cosmos, probably not a bad time. Engine is doing quite well, buck 35. It's up quite dramatically. Near doing quite well. It's up 19% on the week. Engine is up 27% on the week. Cosmos 17, so still good. Telcoin not doing much, kind of quiet. Nexo is up 17.7, call it 18 on the week, 6 on the day. So some of you from gold are getting closer to platinum, from silver getting closer to gold. That's cool. Graph tokens up 30 on the week, quiet on the day, but you know what? It got some back, so that's good. OGN 15, almost 16%, 11 on the day. Not bad, but still having a tough time making that argument. The flow is up 24% today, 61% on the week. Pretty cool, bro. Rune, flat on the day, up 15% on the week. AR, 20% on the week, 6 on the day, not bad. 1 inch, 15 on the week. So this is a recovery from last week's pelting that everybody took, and everybody was depressed and sad. Fetch is flat, but up 36% on the week. That's pretty good. Audius, by the way, took a big bump up today. A little while ago, it was like $1.06. It was up 15% on the day. It was about 26% on the week. Pretty cool. Let's see. Render token doing quite well. 11 on the day, 20 on the week. New kind of failure is up 9.5%, 18 on the week. It's getting some back, but it's down so far. It's down 30% on the month. So it's really, hasn't made much of an argument since it got onto Coinbase. It basically just deteriorated. Man, what up, man? Matrix AI Network, kind of just sitting around doing not a bunch of nothing. AGIX, which is the derivative tokens, up 43.7. So that's the AGI token once it converted over to the new token. And Singularity DAO, $2.61. This thing is up 33% on the day. There's no other metrics. My guess is this thing probably moves pretty consistently, pretty hard, pretty heavy. We'll see. But if they don't get this wrong, this thing could be massive. So we'll see. I'm excited about it. I'm also excited about it. I mean, let me be honest. I got it at 20 cents. So yeah, that's cool. I'm already at what, a 13x? You say, but 10x, take 20. Yeah, bro, I already did. I took 20% off the table. So I'm on the house's money times 2. Woo woo. And now I just let her ride. But at 20 cents, you can get a lot of tokens. So yeah, there we go. Staking and liquidity pool providing are coming for SDAO. I don't think they have that squared away yet. They're still trying to square away their airdrop, but they'll get it. They will. I believe in. I believe in them. Okay, let me see. Who do we have over on Theta? Hush Hush, good to see you. Hits NDC, welcome back. Joe Pirate, Ocean Dawn. What happens next? Scorpion, Viralu. Good to see everyone. I hope everybody's having a great, God, whatever day this is. You're on Wednesday? Weird week, man. I like it. It's cool. I went to Vegas. Vegas is a hot wasteland. It sucks. But man, does your money go far if you're willing to live in a hot wasteland that sucks. Patsy, good to see you. Sebastian, good to see you. Be patient, people. Do not behave erratically while everyone else is behaving erratically. Joe, ¿qué onda? ¿Qué estás haciendo? Okay, so we've looked at prices. Great. SDAO is something I've just been watching because it's like, pew, pew, pew. And I don't look back and wish I had bought more. I bought exactly how many I wanted to buy. So I'm happy. Should I have purchased more? No. Because if I should have, I would have. Make sure you're not looking backwards. Привет, как дела, Мегапак? Я думаю, что всё хорошо. Okay. Let's switch gears a little bit. There's a cool article I found that I thought it warranted mention. Mowing lawns. I know, right? That's our life, bro. Member of Argentina's National Congress submits bill to allow workers to receive salary in Bitcoin. Me thinks this is interesting. This is part of the growing dialogue of the kind of crypto, you know, the Latino spring, the Latin spring. We had the Arab spring. That did not turn out well. But we have the Latin spring, and that is, well, seems to be turning out better than the Arab spring. I guess this would be the Latin summer. I don't know. We'll see. We'll come up with some cool names for that. Garth, good to see you. Jasnot, good to see you. Yeah. Who have I missed? If I missed, say hello, say hi, and throw a like. Okay. Workers in Argentina may be able to receive pay in Bitcoin and store their wealth without fear of inflation. Well, you can store your wealth and still fear fiat debasement and inflation and deflationary. You know, you can still fear those things, but you just won't have to stress so much about them. The pay me in Bitcoin movement just got a lot stronger. Interesting. Maybe that's what we should be. Maybe that's what we should be doing. Maybe we should, every time you're on Twitter or wherever, hashtag pay me in BTC. What do you guys think about that? Todd B, what up? Pay me in Bitcoin movement just got a lot stronger today when Jose Luis Ramon, a member of Argentina's National Congress, announced he submitted a bill that would allow workers in a dependency relationship and exporters of services to have the option of receiving their full or partial salary in Bitcoin. The impactful message in this announcement is what he said in his last sentence. The idea is that they can strengthen their autonomy and conserve their purchasing power of their remuneration. Remuneration. How often do you say that? Remuneration. Your remuneration. Remuneration? I don't know. The citizens of Argentina have been dealing with insane amounts of hyperinflation in the Argentine peso. Okay, just so that you guys know, their whole debt system, their whole all their government debt, like they have sovereign debt defaults like every 7 or 8 years. They actually price it into the bill, to the bonds, to the government bonds. Everybody knows they're going to get written down. It's kind of like tax harvesting for investors. You know for a fact it's going to be insolvent. Anyway, citizens of Argentina have been dealing with insane amounts of hyperinflation in the Argentinian peso, resulting in them being unable to save their wealth. Looking at the core inflation rate for the Argentine peso, they are in dire need of Bitcoin. So these are the inflation rates. Now, remember, Hyperinflation is 15% month on month. Okay. Month on month. So, but these are in quarters. It looks like, oh, wait, let me see. January, February, March, April. No, these are the months. These are the months. Okay, so let's go from June of last year, 45.6%, 46.2% in July. August, 43, we'll call it 44%. Oh, it came way down in September to only 38%. Then 38% again, basically in October. November, 37.8. December, 39.4. January, 41.4. February of this year, 43.7. March, 45.7. April, Jesus, 49.8, 50%. May, 52.5. Can you imagine losing between 40 and 50% of your purchasing power every freaking month? Think about that for a second. Let's take a cup of coffee. Jesus, man. A cup of coffee let's just start at $1. $1, $2, almost $4. Let's see, 7. I'm just doing the math real quick. 7, 13, 24, 23, 24, 32, 60. Sorry, no. 42, 75. And then we're basically 75, 150, $300, almost 300, almost 6. We'll call it 570. We'll call it 1100. We'll call it 2200. So a year ago, a cup of coffee that was $1 is now $2,200. This is month on month, bros. Just keep that in your mind. Can you guys see this? Am I the only one that can see it? Anyway, Ramon went on to state, the initiative stems from the need to promote greater autonomy and governance of wages without this implying a loss of rights or exposure to situations of abuse within the framework of the employment relationship. Argentina seems to be following the footsteps of El Salvador, who made Bitcoin legal tender recently, and this plays out in the recent theme of congressmen in South America and South American countries pushing for adoption of the Bitcoin. Central banks and the fiat system have really hurt these countries via hyperinflation and excluded most of their citizens from having good financial infrastructure. Bitcoin's 21 million hard cap supply saves them. That's not true. Bitcoin's hard cap doesn't save them. But the inability to continue to create more Bitcoin out of thin air. Now, Bitcoin goes out to 100 millionth, okay, Satoshis. So there really are, if you look at it in Satoshi terms, there's 2.1 quadrillion Satoshis, which sounds like a lot, but at least it's some kind of cap, unless they go and redecimalize. Let's not get into that discussion. But the perception is that there is a hard cap of 2.1 quadrillion Satoshi, and that's kind of cool. And no other currency, really, not any of the national currencies or the sovereigns, have any kind of hard cap because you can't run a government that way. And I'm not even saying that a hard cap makes sense. You need, Jeff Snyder talks about this all the time. I think that we agree that you need a currency that can expand and contract with the economy, with growth, with a variety of factors. The problem is politicians have relatively short-term, rather perverse incentives, and they don't get hired. They don't get reelected on the austerity platform, on the let's tighten the belt, let's quit spending, the Maduro diet or whatever, Maduro diet. So, yeah, that's the frustration. So it's nice to have some kind of perceptibly finite supply of a currency for a store of value. Bitcoin is not a currency, or at least it's not being used as a currency, and that's okay. It's nice to have a place to put your currency units, and they won't disappear. If all you can do is just approximately measure or be a proxy for profligate government behavior, printing, debt destruction, all this kind of stuff, then maybe you have something. Okay. Bitcoin's 21 million hard cap supply saves them from suffering any more wealth evaporation and allows them to be their own bank. Yeah, kind of. Depending on their access to be able to spend that Bitcoin, I would say absolutely. According to Account, only 48.7% of the Argentinian population has a bank account. See, that's problematic. That's more than half the country doesn't even have a bank account. That's not really, you got to give everybody access to their currency units. Really supposed to keep it in their bed, in their pillows? Only 48.7% of the Argentinian population has a bank account, yet 78% have internet access. Ding, ding, ding. More people than ever before in Argentina will be able to get paid in, store their wealth in, and spend their money in Bitcoin, thus improving the quality of life. Beautiful. I agree. So, Mr. Nick Hoffman, whoever you are, cool article. You didn't embellish too much. You didn't cook the numbers. You told the story. We like that. So, in summary, member of Argentina's National Congress submits bill to allow workers to receive salary in Bitcoin. Yay. That's kind of a cool thing, right? I would imagine everybody should be somewhat happy about that. That makes the world a better place a little bit. Okay. Let's go over. Let's go look and see if there's any cool news. Boston Celtics announce official partnership with Socios. Hashtag who cares? Well, you care if you own Chili's. Partnerships. Income Payments partners with Flexa to enable seamless digital currency acceptance from merchants. Not super exciting. Next. Allied Payment Network to offer crypto access in NYDIG partnership. Yes, is important. Let's dig in. Open link in new tab, please. Boop. Allied Payment Network to offer. Okay, real quick. You guys understand that NYDIG is the one that's hooking up banks with crypto wallet providers so that you as a member of Chase or you as a member of Wells Fargo, Bank of America, go down your list, or some of these smaller banks, and it will probably start with the smaller, more provincial banks, the credit union and such. You can buy Bitcoin directly without having to use Coinbase, without having to use crime nance, without having to use any exchange, really. So you'd be able to go right through a wallet that's hooked up to your bank account and pew, you can buy some Bitcoin. So anyway, that's why NYDIG is important, because they are in the trenches. They have 650 agreements, I guess, in place, or at least potential. So let's see what Jamie Crawley has to say about it. Allied Payment Network, a digital payments provider for financial institutions, plans to allow clients to buy, sell, and hold Bitcoin through a new partnership with NYDIG. The partnership also allows Allied Payment Network, we will call them APN, to make a Bitcoin allocation for its corporate treasury. You see, treasury function. Bitcoin can be successful if all it ever is a treasury function. It doesn't have to be a peer-to-peer payment system. It doesn't have to be the way you buy coffee. It can be wildly successful simply as a asset sitting on balance sheets. So keep that in mind. Okay. It would give customers of Allied Payments Network, APN's clients will be given access to NYDIG's platform when making bill payments through online or digital banking. Allied's aim is to help its clients, many being small, local, or regional institutions. So you can think like those kind of credit unions, things like that, the smaller banks that actually have customer service. It will help them compete in the marketplace with a differentiated service. Providing access to Bitcoin does just that and is a game changer for many community institutions that are struggling to compete, says Ralph. Thanks, Ralph. In that sense, the partnership is similar to the one NYDIG recently entered into with Texas-based fintech firm Q2, the online banking software provider, to 450 small and medium-sized banks and credit unions. And for those of you that didn't know what that was, let's look at that story really quickly. And then you can kind of see how NYDIG continues to branch out. Let's see. No, I get that a lot. I think you did your math wrong. Remember, if it's 50%, that's going to be, so like a $1 cup of coffee. I think you're a little low on that because a $1 cup of coffee, let's just say you have a 50% inflation, would then be $1.50, right? Did I get that right? $1.50 because you add the 50%. Your buying power is reduced. 50% means it's cut in half, right? 100% inflation, oof, that's the end of the world as we know it. So, yeah. Anyway, not that that matters. You get it. You all get it. Okay. Let's see. This guy looks happy. He looks happy as hell. Well, I guess he's part of NYDIG. He is happy as hell. Let's see what we got. NYDIG, NCR, to bring crypto purchases to 650 banks. I'm guessing it's the 450 from the deal we just talked about plus some. Okay, a partnership between digital asset management firm NYDIG and NCR will make crypto purchases available to 650 banks and credit unions. The initiative in response to demand from NCR banking clients whose customers have been buying crypto through outside exchanges. See, guess who else is worried about currency flight? Banks. Banks are also interested in currency flight. So those who will, those clients will now be able to access crypto trading through their banking apps with NYDIG providing custody. The partnerships could also bring crypto to 24 million customers across the 650 banks that NCR services. A lot of the banks have seen that one of the biggest outflows from their depositors is moving money through the bank to exchanges like Coinbase. So China was like, this is a scam. We hate Bitcoin. We hate capital flight. Listen, China hates capital flight. But you know who else? Banks. Banks hate capital flight. They do not like it when money exits because guess what? They're seeing that when $100 leaves, $100 doesn't come back. Eek. What happens when you're allowed to pay bills directly from your Nexo account or your Coinbase account or your Kraken account? Are you going to bring your money back to Chase or Bank of America or any of these scammy, big giant conglomerate banks? Probably not. So anyway, a lot of these banks have seen that one of the biggest outflows from their deposits is money moving from the bank to exchanges like Coinbase, said Yan Zhao, co-founder of Stone Ridge, sister company of NYDIG. And so that's part of why banks are so excited to have this capability for themselves and for their customers. So they will push it on their clients. And when they push it on their clients, what are you going to do? A lot of people probably will say, oh, cool. Well, if the bank's doing it, maybe it's easier. And maybe it is easier, but this is a gateway. And I don't even care if for some people, custodying their assets at a bank probably makes more sense. Or at least if they think they're custodying the bank, it kind of makes more sense. Yeah, that's true. It's only capital flight when it leaves. Otherwise, it's just investing. It's just moving money around. But if it leaves the bank, then it's capital flight. Oh, yeah, God. So I don't know I know Anthony knows this. Some of you know this. I had deposited I don't know exactly how much it was. It could have been $4,500. It could have been $6,000, whatever, somewhere around $5,000 worth of cash. This was about a month ago. I went to the ATM. I put the cash because I don't really have cash. So if cash accumulates over a few months, I just throw it in the tin. And I actually have a crypto client who pays me for consulting in cash. I'm like, this dude's got to be a money launderer, but he's not. He runs a weed dispensary and they take in so much cash. Well, they don't call it a weed dispensary. They call it a cannabis dispensary. But anyway, he's legal. He's got all the permits and all this kind of stuff. So, but he pays me in cash. And I'm like, oh, man, I hate cash. Cash is trash. And he's like, I'll give you extra. And I'm like, okay. So whatever. So he pays doesn't matter what he pays. It's a lot. And he gives me cash. So I wait and it accumulates. And after after I've met with him for 8 or 9 hours, I have a chunk of cash. So I go in, I deposit it at Chase in the ATM. And halfway through the deposit, it goes, beep, 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 little red thing. I get a note on the screen. This ATM is broken, basically. take this receipt with this complaint number and go into the bank and talk to them. So I go into I take my little receipt, my money's gone. I go in, they see what happened. I said, the machine froze. Do you want to just go get the money? It's in there. They're like, well, we don't do that. I go, what do you mean? It's your it's your ATM. How do you not go get money out of your ATM? I just lost money and it just go open it up. They're like, we can't. I'm like, what do you mean you can't? It's your ATM. It's attached to the building. I can see the back side of it. I see the keyhole where the technician does whatever the technician does. They're like, no, that's not what that is. That's electrical stuff. I'm like, oh God. So anyway, long story short, I have to call. I spend between an hour and a half filing a report with Chase where they ask me, how much did you lose? I said, I don't know because your machine didn't count it. They go, well, estimate. I said, okay, 5,000, I guess. We'll call it 5,000. They said, okay, cool. So they put an impermanent credit on my account of 5,000, which I didn't have access to, by the way. That wasn't for like weeks later, but an impermanent credit of $5,000 because I just told them 5,000. What I figured is they're going to count it up. And then after they've counted it up, they would tell me, okay, it was 6,200, so you're plus 1,200, or it was 4,200, so you're minus 800. Here's your credit, whatever, right? No. And this is how you know they don't have any clue what's going on. I get a letter in the mail that says, upon review of the machine, we determined that your claim is valid. The impermanent credit is now a permanent credit to your account. I said, what? So now the 5,000, just because I came up with that number, 5,000, because it's a round number. They said, cool, 5,000 is credited. I'm like, but what if it was 6,000 or 4,000? They just credited the 5,000, meaning they went inside. So what happens is there's a, what do they call it? Deflector, diffuse. There's a separate bin for money when it gets all gummed up and it just spits it all into that thing. Only apparently it happens so often that they can't even count it. It's too big of a number to count. So diversion tank, something, whatever. There was something that some term. And they have no clue what's in it, apparently. And the people at the bank don't even service the ATM for the bank. So they're trusting the guys that came over and just cleared the diversion tank and said, this is what's in it. And then they guess they run that next to all the claims they had. Here's the thing. If I hadn't been watching that screen, if I had just been going through my robot technique and like deposit, grab my receipt and leave, I would have never known that my deposit did not hit. That's it. I would have never known. So when you think that they know what's going on, they don't. These banks don't know anything, dude. It's just a nonsensical dumpster fire. A lot like Binance. Anyway, that's a cool diversion. Let's go and let's talk about some cognitive bias. I probably should get like a cool cognitive bias thing, but for now we'll just have to use the truth bumper.
You want answers. I want the truth. You can't handle the truth.
Oh yeah. God, I love that. You can't handle the tooth. If you're a dentist. Okay, everybody sit back, relax. Let's talk some outcome bias. Let me grab the banner. Boop. Let's talk some outcome bias. Okay. Let's see. What do we have?
LeBron James, LeBron James, LeBron James, LeBron James, LeBron James.
That kid's the greatest. Let's go with. Okay. Outcome bias. You know what? Maybe I should put it on the screen. This is fine. You won't be able to read it anyway. Outcome bias. This is a human tendency to judge a decision by its eventual outcome rather than based on the quality of the decision at the time it was made. Example, people who play the lottery on a regular basis will cite rather anecdotal evidence of wins as victories from friends and acquaintances in order to justify their continued purchase of lottery tickets. Oh, my buddy won X amount, or so-and-so won this. And just real quick, you guys know that lottery is a tax on poor people, right? It's a tax on people that can't make good decisions. So don't play the lottery, and don't play the lottery when you're quasi investing. If you're in the crypto space, it's because you're investing. Don't be one of these trading douchebags. Anyway, if you're a trading douchebag, I apologize. Actually, you know what? I don't apologize. If you're a trading douchebag, you're a trading douchebag. You deserve whatever you get, a win or a loss. If you win, awesome. You got lucky. If you lose, great. Statistics are accurate. Okay. Another example of this outcome bias. We're talking outcome bias, right? Judging a decision by its eventual outcome rather than the quality of the decision at the time it was made. Like when you hear people go, they bought like some stupid coin, dumpster fire, CZ coin. CZ comes out with a new coin. I bought CZ coin. Like, but it's a coin with no cap and it's run by a criminal. So I'm making money, right? But that doesn't validate the decision-making process. I made money though. I'm making that money. That's luck. Luck is not a strategy. All right. Another example would be risky investments that were later cited as genius when scrutiny of the original investment would show that the decision was really a poor choice, given the facts available at the time. So if you look at all the information and it's a flawed decision, whether the outcome is good or bad, if at the time of the decision you made a flawed decision, everything after that is randomness, luck, and some chaos. Whether the price goes up or down has nothing to do with the fundamental decision-making process, okay? And we want to make fundamentally sound decisions. This is the thing, because that is a teachable, repeatable process. If we're making sound decisions, if you are making statistically as accurate decision as you can, game theoretical decisions, very pragmatic, critical thinking-based decisions, then it's a sum over histories. You're going to be more right than you are wrong, as long as your foundation is based on good data and evidence and sound theory, right? So, very often bad behavior is incentivized in the crypto space, as you've seen. Let's look at where bad behavior is incentivized in the equity space. GameStop, Ford, AMC. If you own any of these, I hope that you won, but what you're doing is flawed. You're gambling. And just be honest with yourself that you're gambling. That's all I say. I hope everybody here wins. I don't want any of us to lose money. I don't want anyone to lose money. Even these people I don't even want gamblers to lose money. Right? That's like depressing. They're losing their rent checks and their baby formula and all this. I want everybody to make money, but you need to be honest about what you're doing. That's the key. Just be honest. I'm gambling. I'm buying XYZ coin and I'm buying AMC, not because it's a good company. I'm buying GameStop, not because it's a good company. I'm buying Hertz, not because it's a good company, or Ford or Tesla. None of these are good companies. All of their debt is beyond junk, like junky junk. The whole world knows these are junk companies. The problem is that a lot of the world got lazy and they overshorted these assets. So people are taking advantage of technical problems in the structure of the investment. But everybody else is piling in because they think, yeah, it's going to go up. Why would it go up? It's bankrupt. Because it's going to get a bailout. But should you bail out bankrupt companies that have been run poorly? I don't know. No, you don't know, because your IQ is just above like a fish. The investor IQ right now is low. Like you'd have to crawl to get beneath it. And so that's gambling. Well, then it gets into a question of, do you have the cognitive capacity to know that you're even gambling? That's another question. We're just going to assume that everybody here has like over 110 IQ. All right. How to avoid this? And again, we're talking about outcome bias, right? You know, looking at a bad decision and saying, well, it turned out fine, right? But that's still a bad decision. Okay. How to avoid this? Steer yourself clear. Let me get another one. Steer yourself clear of the influence of outcome bias To do this, you should evaluate a decision by ignoring information that has been collected after the fact and focus most on what the right answer is or was at the time of your decision, at the moment that you made the decision. I have IQ of a fish. Patrick, do you own junk? Do you own junk? I think you own some junk. Hey, you have a high IQ as long as you, well, I don't know. I can't say that either. You're above a fish if you can admit that you own junk. Just don't try to convince yourself that you outsmarted the world, right? That's the thing. It's like when you gamble. If you pick 6 lottery numbers, don't show up with a suit and be like, I'm a financial advisor. What are you advising on? Number picking? You have a random number generator on your phone? What are you talking about? Like all these D-bags that were, unemployed 3 months ago or 4 months ago, and now you need to go to their Twitter profile and their LinkedIn, and it says investor, entrepreneur, investment advisor, wealth accumulator, strategy, corporates. What? Anyway. Okay. When reevaluating a position, a holding, or trade, this is reevaluating, right? You're taking that second look. Make sure to treat it as a fresh trade or do your best to approximately weigh all the available data information, not the price movement. The price movement should not dictate whether it's a trade or not, right? Or whether it's an investment. It would probably dictate, it would help you dictate whether it's a trade. So let me reword that. Price movement alone is not enough for an investment. It can color the argument. That's it. Now, price movement may dictate the way you exit an asset or the way you rebalance an asset, right? But it shouldn't be the way you enter an asset unless you're just a gambler. Prove to yourself. So, okay, let me reread that last sentence because it's important. When reevaluating a position or holding or a trade, make sure to treat it as a fresh trade and do your best to approximately weigh all of the available data and information as if it's a new trading decision at that moment, right? And a trading or investment decision can be to sell also. It's not just buying. Prove to yourself that a position is worth investing in, or clean it out and start over, or scale down. Okay? You may still have some belief in it, but if your conviction is not there, just dial down the conviction. Just dial down the investment commensurate with the conviction. So an example of this, I've been looking at Audius, and I'm less excited about it than I used to be. I'm not going to exit completely, but it's done nothing, and I'm not sure that team knows how to do anything. It only moves when they get a new musician or an influencer that goes on their Twitter or whatever. So if their whole business model is around, hoping that new influencers and people with good Twitter following and Instagram following and musicians and stuff put the word out for them through social media about their decentralized Spotify type asset, I'm not sure that's a game plan. Just get all the kids to say that they use it and people will buy it. No, bro, that's not been working. And as you can see, as the market cooled off, they got gutted. So, I've made money on it, but I'm no longer excited about it. So that's a position that I'm going to scale down. Now, it may go up. It may go up to $100. I don't know. But based on what I see now, making a new decision, would I buy Audius right now? No. So then I have to decide, okay, is it worth holding? Well, if I wouldn't buy it, why am I holding it? Where's my conviction? My conviction is about 25% of what it used to be. Ergo, I'm going to sell 75% of my position because that's what you do, because that's with the information that I have. And I'm willing to be proven wrong that they really do have something under their sleeve and they're going to do something magical. And if it starts to rise, and I'll make a new decision. And maybe the new decision is different than the old decision. But for now, I'm out. My name's Bennett and I ain't in it. Okay, cool. Any questions about that? Yeah, I know. Noodle swap. We got to have some more stupid food and animal names. Have you seen, what is it? There's another dumb Doge. There's even a spinoff, a Doge, Sushi, Shiba, freaking, they just keep spinning these things up and idiots come, but it's less and less. It's less and less idiots because, and the idiots are going to keep diminishing, by the way, because they got to go pay rent. Because at some point, forbearance ends. People will be getting evicted. Some people. I can't imagine the states are going to make everyone whole. Maybe they do. Maybe that's the world we live in, and it's constant. And you have to factor that in too. You have to factor in the potential that everybody's made good all the time, and we live in a new era of full-time universal basic income, and nobody ever has to pay their debt ever. And in that case, you definitely want to own some Bitcoin. Because if this thing, this is the great thing, if this unwinds and all the idiots get punished, cool, we're going to have some turbulence. If they don't get punished and the government bails, and every government bails everyone out ever, well, that might start to look a lot like inflation. And it'll definitely be devaluation of the currency, right? How can you not? And so then, as we approach this modern monetary theory thing, whatever that looks like, where idiots just print and print and print because who cares? At some point, and of course, all these MMT geniuses, they're going to just disappear. You know why you don't know the names of any of them? Because they're nobodies. And they'll go and tell everyone, oh, MMT, you can print whatever you want. And politicians are like, sweet, these MMT nobodies say that we can, so when they're talking to politicians, the politicians say, these doctors, these learned souls, these professors are telling me that we can spend money forever. There's no such thing as a sovereign debt default, ever. We'll just print jobs forever. And we're just in default to ourselves, which means we can just pay ourselves by printing more money forever. Those same learned scholars and advisors, all that, they will just disappear the second this whole thing S's the bed. Why? Because it's mostly nonsense and they are nobodies. And they'll just disappear. And they'll be like, hey, who was that one person that was talking? Oh, I can't remember. Yeah, you can't remember because they're not memorable people. They're kind of they're educated fools. And they're pushing something that they don't really understand. They're just, is one of our biases, injury through intelligence. They're just smart enough to not realize how smart they aren't. And so they propagate a bunch of flawed thinking, poor game theoretical, biased junk, and a bunch of compliant rubes, and a compliant media, and a bunch of lemmings, and a bunch of politicians with very perverse, very short-term incentives just parrot out their bullshit over and over because they're not smart enough to know how fucking stupid they are. Anyway, cool. Let's talk about overconfidence effect. Ooh. Go on. Let me adjust our little banner thing. Give me a second. Let's see. We got outcome bias. This is the way I can keep track of it. And then each day we really have this set. Okay, let's talk overconfidence bias. When one person possesses excessive confidence in one's own answers to questions. That sounds pretty obvious, right? Example, in certain types of questions and mathematical problems, when people rate their own answers as 99% certain, they turn out to be wrong 40% of the time. It's another ancillary of injury through intelligence. Sometimes you overestimate your correctness. And this is the overconfidence effect. And we all do this, especially if we have something that we're kind of good at, then we may overestimate our prowess or our ability to do that task, to do that thing, to understand, assimilate that information. So another way to imagine this overconfidence effect is when you take a test, you believe you did great, and then you find out you missed a bunch of questions. Confidence in making a decision is good, right? I want to be confident that I know the information. Confidence is fine. Overconfidence can lead us to ignore information, skip over the necessary homework, the homework that's involved in creating your thesis for entering a position in the first place, right? And Jerry talks about this a lot, and I try to talk about this a lot. You have to always go back and unpack and make sure that your base, the base of your building is solid, right? Your foundation for thinking. So there's certain things you need to understand. You ask Antonio, what does he always say? Go read the Bitcoin white paper. Start at the seminal document, because that's the beginning. Start at the white paper. All of you should do this. Even if you've read it, you should go read it again. Start at the seminal document, which is the Bitcoin white paper. It actually came out in October of 2008. Craig Wright will have you believe that he wrote it. He's such a jackass. Anyway, go read the Bitcoin white paper. Then go look into the Bretton Woods Agreement, because in order to understand the failings of currency, you need to understand where currency and money went off the rails. The last time that people really thought that an asset could be pegged to a store of value, that a currency could be pegged to a store of value, and that would limit profligate spending and printing and currency creation and all this, they were wrong. And it was made very clear in a bunch of different ways they were wrong, not to mention the spin up of the euro dollar market and all that. But yeah, hubris, man. Hubris. So let's continue. Overconfidence can lead us to ignore information, to skip over the necessary homework involved in creating your thesis for entering a position. It can cause you to not only ignore information, but ignore structural kind of very base, very what you might think is obvious. So for instance, the Fed funds market is like, oh, okay, the federal government sells some treasuries, whatever. Okay. And they set an overnight lending rate. I got it. No, you don't got it. Oh, repo. Some people borrow and some people loan some stuff, and treasuries is cool. No, bro. No. And it's not so simple. And so sometimes we kind of gloss over the things that are super, super important. Yes. Well said, Antonio. If you don't know the whys, the whats are irrelevant, right? You know, you don't want to ask, what should I buy? You say, why? Why should I buy these things? Why should I trust? Why should I not trust? Why should I be, apprehensive? Anyway, let me continue. Many great traders and investors diligently try to find the holes in their own decisions and decision-making processes, so that they're letting the available data and current information formulate their trades or investments, right? Have a good foundation based on solid, as concrete as you can, structural information. How do the gears turn in the watch? It doesn't matter what the time says if the gears are jacked. You need to understand how the gears turn. So you must be willing to find the holes in your own logic and adjust accordingly. Don't get stuck in a trade or an investment because you hate taking a loss. If the information and fundamentals materially change, you have to exit or rebalance. You have to get good at this. It's like when you're in traffic and you're driving and you choose the wrong lane and you're like, dang it, I'm just going to sit here. No, get out of that lane. Just go back. It's not like the cars behind you are scoring. Oh, haha, I chose the wrong lane, -1. No, if you get in the wrong lane, get back in the right lane. Don't punish yourself. Feel like, oh, I'm so married to this decision. It's a lane change. Just click your blinker and go back into the fast lane. Don't get embedded into your decisions. You're just taking in the information. You're making a decision. It's wrong. Adjust, course correct, and do it quickly. Don't wait. Don't be like, oh, I took a loss. You're going to take a loss. So what? You're going to lose on a couple of these things, because you don't have control over everything. You're just looking at information. There's no way to know. If somebody knew all the right answers, they'd have all the money. And no one has all the money, so you know that no one has all the answers. That's another reason that you know with 100% certainty. This is the only thing that's absolute. And that's that it's not the only thing. One of the few things that is an absolute is that purely technical analysis doesn't work, because if it did, the technical analysis guys would have the entire market they would own all of it. They'd own everything. They would literally own it all. And they do not. because technical analysis only tracks back about 30% back testing. So anyway, long story, whatever. Don't get stuck in a trade because you hate taking a loss. If the information and fundamentals materially change, you must exit or rebalance. Like I'm doing with Audius. I'm rebalancing. Okay. If as you're looking into a particular coin or token or investment, you start believing that you're a rainmaker, you'll ignore the information or take shortcuts in the research. Do your due diligence. Problem, token supply, circulating supply, market cap, development team, other investors, developer and early investor token behavior. Are they selling as fast as they can based on lockups? Are they pulling little Brad Garlinghouse shenanigans, selling at a discount, then going on CNBC and lying right in your face? And yet you still support him and you're like, we love Brad. And I'm like, yeah, but Brad lied to you and stole from you. But we love Brad. Right, because you're an idiot. Do the homework, make your decisions based on information and data, not some belief, not some quasi-religious belief, right? In trusting the team. Don't think that you're smarter than the rest of the planet. If you were smarter than the rest of the planet, well, one, you wouldn't be here listening to this because you'd be smarter than the rest of the planet. If you're smarter than the rest of the planet, you'd have all the money. Nobody here has all the money. I know I don't. And guess what? If I had all the money, we wouldn't be talking. I'd be trying to go to space. You don't see me going to space. I'm going to have to buy a ticket like everyone else. First one to Mars, bro. I'm probably going to get blown up halfway there. Anyway, keep in mind, overconfidence is why Warren Buffett and Charlie Munger never got into cryptocurrency. Matter of fact, they never got into technology at all. Like nothing. It's why arguably the two smartest investors of the 20th century completely missed the biggest appreciating asset in human history right after they missed the other biggest sector in human history. And guess what? They're still uber billionaires. You know why? While they were overconfident in other areas, they were really good at value investing. They kind of stayed in their lane. They also realized, and maybe this, you could take the other side of the coin. I'm not even so sure as I read back on this that it was overconfidence. I think it was a lack of understanding. And they said, we don't get this, bro. Yeah, the internet will be like the fax machine. Yeah, I mean, there's a lot of dumb-minded statements. But when you hear those kind of things, at least with Charlie and Warren, they said, we don't believe in it and we're not investing in it. Does that make sense? So this can go the other way. And maybe Warren and Charlie are even that much more intelligent than we think because they stayed in their lane, they do what they understand, and they're wildly successful at one very clear, value-oriented path of investment. And they've nailed it. I mean, no one's nailed it like they've nailed it. like they get it. So overconfidence in what you do and what you think you know, and what you think you can do, it can be your undoing. Imagine if you woke up at 3 a.m, someone shakes you and they ask you, what do you think of this? 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 Then you're going to get the real answers. So part of me says, don't be a Warren or a Charlie, but part of me says, be a Warren and a Charlie. Get a fundamental understanding of the market, at least the way you believe in it, right? Understand how the gears turn inside that watch on your wrist. And then you start making your investment ideas, and then you express them as trades, whether that be an investment, which is a year or longer, or simply a trade, which is a year or less. So I probably have to go and change that, because this one was kind of, when I first wrote this a few years ago, I was kind of like, Warren, and because I like Charlie Munger. Charlie Munger's awesome. Matter of fact, Charlie Munger and his study of cognitive bias is the reason we're talking about cognitive bias, because I think Charlie Munger is one of the smartest humans. He's in his 900-year-old age, so he's probably not as sharp as he used to be. But my guess is he's sharper now at 93, 94 years old. He's still sharper than probably at 93. I think he's probably sharper than I will ever be at my very best moment in my entire life. That guy right now at 93, he's a razor blade, bro. And he's, in my opinion, he's the brains behind Berkshire Hathaway. Warren is the mouthpiece. Charlie is the brains. Everybody, Warren Buffett. No, man. If you ripped, if Warren Buffett pulled his shirt apart, inside there, the machine pumping, nuclear brain fluid, that's Charlie Munger. Anyway, so instead of saying don't be a Warren or a Charlie, absolutely be a Warren Buffett or a Charlie Munger. Figure out what your base case is, understand the market as much as you can, then start deciding based on your risk tolerance, where you're willing to go in there, how far, how deep, but always look for holes in your own decision-making. Always look for some kind of failing. Make sure you understand the gears. And if you don't understand every part of the legacy system, how are you going to benefit from this system that's looking to replace the legacy system if you don't understand the system this is going to usurp? You can't really, otherwise you're just guessing. Don't just guess. That's not a way to win. I guessed in the beginning, but I'm honest about it. I said, I was guessing. I didn't really know what I held. I understood Bitcoin and that's it. And I said, well, XRP and XLM because banks. Because why? Well, because banks will want a thing for them. What was that? Were you mumbling? What did they want? Where you had marbles in your mouth? If the me of now could talk to the me of 2014, 15, 16, I'd have a lot of questions. I would say, what are you buying? And why are you buying? And who knows? Maybe my thoughts would have been different. I don't know. Anyway, take that as you will. We will do this again tomorrow. We will talk about risk compensation. So actually, let me adjust my banner accordingly. Okay. Stay out of trouble. Stay in school. Don't do anything my drunk, insolvent, poor, strung out on meth, sketch ass, high as a kite, grandmother wouldn't do. And she looks like a sugar cookie. She's got that angel dust all over her face, smoking that water.
LeBron James, LeBron James, LeBron James.
Hey, this is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, you talking to the Prophet? Hey. We talking condos and nice clothes and driving Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them house roads, but had to stay low. Now there's solutions to hard bills we couldn't pay for. I talked to Prophet to get some profit, we couldn't chase the top. If it's a stock and I need a cop it, I wait for him to drop it. Ain't no option, let's get it poppin', we chillin' in the drop. I need some crypto, put it in my pocket, by any means I rock it. This is the Prophet with Nick Black, it's time to chit chat. You know nothing about blockchain, we here to fix that. You want the news on them new stocks, this where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, you talking to the Prophet. Hey, you talking to the Prophet.
It's all fake news. It's phony stuff. It didn't happen.